Hello guys, my name is Max. Today we're going to talk about stablecoins and why holding USD-backed stablecoins is not a great idea over time. We've explained in a different video that most stablecoins today are USD-backed. So we have USDT, of course, the most popular, USDC, we also have BUSD, etc., etc. And we're going to explain why fiat-backed and most specifically USD-backed stablecoins should be avoided by crypto investors. Now, this doesn't mean that you shouldn't hold any USD-backed stablecoins at all, of course. But let me tell you why it's a good thing to diversify and to also have stablecoins of a different nature. If you're a cryptocurrency investor, you're probably familiar with the notion of circulating supply. It means that the more there is of something, the less likely it is to go up in value. That's, of course, in theory. It doesn't apply to everything. So if you're aware of that, you should also be aware of what's happening to the collateral of USD-backed stablecoins, the dollar, obviously. In 2020, over 40% of the total circulating supply of the dollar has been dumped onto the market, which means that $9 trillion, which is equivalent to $9,000 billion, have been printed out of thin air by the Federal Reserve. And that was in a single year only. But some economists already anticipate a future inflation rate that will reach unseen highs. Now, you're wondering, well, why is he talking to me about inflation? I want to know about cryptocurrencies. Well, here's the thing. Let's do a very quick comparison between buying Bitcoin with USD and buying Bitcoin with gold. It's a quick yet very efficient comparison that'll please the Bitcoin maximalists among you. Bitcoin is, by nature, deflationary. And we all know that there will only ever be 21 million Bitcoin in circulation. That is deeply rooted into the code, it cannot change. So that means that in theory, Bitcoin is prone to go up in value because the rarer something is, the more expensive it should be. But the dollar, on the contrary, as we've seen, is inflationary by nature because of the injections of the Federal Reserve and such. So we now have two elements. Bitcoin should in theory go up in value. The dollar, if it continues like that, should in theory lose in value. So that means that comparatively speaking, you'll be able to buy less and less Bitcoin as time goes by. And the same applies to Ethereum. As for the most well-informed of you, you know that Ethereum 2.0 and the EIP 1559 that is to come is going to bring scarcity to Ethereum. But what if you decide to buy Bitcoin with gold? So we've seen that Bitcoin is deflationary and the USD is inflationary. And on the other hand, well, you have gold, and gold is, well, flat, so to speak. Let me explain. Of course, the daily fluctuations of gold do not make it flat, so to speak. But what does a unit of gold gain or lose in value against? That's right, the dollar. So it means that it will appreciate or depreciate, comparatively speaking, with the dollar. But in itself, it doesn't lose value. It's the same as when people say 1 Bitcoin equals 1 Bitcoin. Well, with 1 ounce of gold, it's the exact same thing. So in itself, gold retains value. Let me give you an example. Before the Industrial Revolution, if you wanted to buy a cow, and you know that's something people did back in the 19th century, if you wanted to buy a cow, it would cost around an ounce of gold, which is a bit more than 31 grams of gold. If you want to buy a cow now, it's the exact same price. But if you want to do that thing with US dollars, it's not possible. The US dollar has lost 92% of its value since the early 20th century. Which means that gold is neither deflationary like Bitcoin nor inflationary like the USD, but it's more like, well, flat. So, comparatively speaking, your Bitcoin purchasing power will be higher with gold than with the dollar. And it's not the case if you want to buy Bitcoin or crypto only, it's the case everywhere. Your purchasing power will remain higher if you use gold as a day-to-day means of exchange in the long run. Which means that in terms of investment, or at least long-term investment, it's always good to have something that doesn't depreciate over time. If you think we're right, well, you can click in the first link in the description to buy your first grams of gold. And even better, if you've made some profit on Bitcoin or Ethereum in the past weeks or month, which is, very likely, you can transform that profit into gold using the same link. Thank you for watching this video. If you liked it, let us know. And if you wish to know more about gold, investments, and cryptocurrencies in general, you can subscribe to our YouTube channel. It's been Max. Talk soon.